Aloha folks, welcome back to another video. My name is Mark, Mr. Dividend Investor. Today I want to talk to you about three great companies, great dividend companies that I'm going to personally invest on in the month of December. So hopefully you like this video. Sit back, enjoy as I tell you the companies that I like, that I plan on investing on. If you're new to the channel, just wanted to say welcome. If you are new to investing and you want to learn about which companies to invest on, whether it's dividend companies or growth stocks, you've definitely hit the right channel. Hit that like button, really helps the channel grow, but also hit that subscribe button. I do a lot of stock reviews, company reviews of stocks that I personally like and I personally invest on. So if that's something you like and you want to learn and you want to grow with me and make that money, so definitely join me and hit that like button. As always, please remember this is not in any financial advice. This is just me sharing you my thoughts, my thinking, what I'm looking at when I'm investing something. Let's take a look at this company. So the first one in our list is Tex Texas Instrument. It is a company that designs and manufactures semiconductors. So if you look at their website, you can see the different types of products that they provide for consumers and companies. Now, if we look at the Yahoo Finance and look at some of the charts, you can see the year to date it is a steady incline up. Market cap is about 152, P ratio is 31, 52-week range, the high is 166, the low is 93. If you look at the performance outlook, it is bull. Looking down to the earnings, you can see 4 straight beats. Financials, you can see steady increase in revenue and earnings, so that is great. Looking down to the trends, you can see it is a mixture of holds to buy to strong buy. The rating right now is between a hold and a buy. Price target is in the average 158. It is currently right now a little bit higher, so that's something to kind of think about. Now if we look at Simply Safe Dividends, their score is very safe at a 90. Dividend yield is 2.45. Looking down to the key metrics, you can see a payout of 65%. Looking down to the growth, you can see the last 20 years 20%, last 5 years 21%, last year was 22. Now one of the things I really like about this company is that it has 31 plus years of uninterrupted dividend streak. So these are companies that I like, that shows me that they're solid, great companies. 16 years of dividend growth streak. So the dividend payment is quarterly. You'll get paid February, May, August, and November. Annual payout per share is $4.08. Now let's take a look at bar chart and let's see. Now in bar chart, you can see currently it is a moderate buy based on 21 analysis. A month ago, it is also a moderate buy. 2 months to 3 months, it's been a hold. Next on our list, it is American Tower. Ticker symbol is AMT. It is one of the largest global REITs, in the leading independent owner, operator, and developer of multi-tenant communications. So if you look at their website, you can see 5 countries, 5 continents, 20 countries. So massive company. I like this company because I think you'll benefit with the rollout of 5G. Now, if we look at Yahoo Finance, you can see the year to date, it's kind of up and down. Market cap is about 101. P ratio is about 54. If we look at the 52-week range, the high is 272. The low is 174. It is uh, bull right now. I mean, no, bear. It is bear in the terms of the performance outlook. If you look at the earnings, you can see three misses and one beat. So something to kind of consider if this is one of those companies you're looking at. If you look at the earnings, much better. You can see the earnings have been steadily increasing as well as the revenue. Now looking at the trends, you can see is a mixture of buy and strong buy. The recommendation right now, it is a buy. It is currently lower than the average price, target price of 283. It is currently, at the time of this video, 228. Now if we look at Simply Safe Dividend, their dividend safety score rates it as safe, 78. Dividend yield is 2.12. Again, the market cap is 102 billion. Now, if we scroll down a little bit through the metrics, you can see the payout ratio is 52. Look at the dividend growth. You can see it's about 22% the past 5 years, which is a great one. Last year is about 20%. It is not as much as the Texas Instrument, but they did have an uninterrupted dividend streak of 7 years. So again, this is a company that I like because I feel like it will benefit once 5G starts rolling it out even more and more. Quarterly, you will get paid in terms of February, April, July, and October. The annual payout would be $4.84. So let's take a look at bar chart. You can see in bar chart, it is currently a strong buy based on 14 analysis. Pretty much the same thing as last month. Strong buy. Past 3 months and 2 months has been a strong buy. So it has been favored by, not only other coins, but bar chart as well. The last on our list, it is Becton, Dickinson and Company. So this is a company that they manufacture and sell medical devices. So this is one of those companies that is helping us with the current pandemic. They provide medical devices for hospitals, nurses, doctors. Now let's take a look at the Yahoo Finance. You can see the year-to-date, again, it's kind of slippery up and down. Market cap is about 70 billion. P ratio is 89 with the 52-week range of 286. The low is 197. Now if we look at the performance outlook, it's a mixture of green and red. And then if you look down to the earnings, you can see much better, 4 straight beats. Now the revenue and the earnings, you can see it is increasing as you go. With 2020, 17 billion and earnings is 874. So solid. If you look at the trends, it is again a mixture of holds to strong buy and buy. The rating is between a buy and a hold. It is lower than the average price of 273. Currently, it is 242. Now, if we look at the Simply Safe Dividends, you can see it is a dividend safety score of 91, which is very safe. The yield is 1.37. Now, scrolling down even to check out the metrics, payout ratio is 31. Now, this is why I like about it is that it is an uninterrupted dividend streak of 48 plus years. It's been growing for 48 years. So solid dividend payment. Dividend growth for the past 20 years was up 11%. Last 5 years is 6%. Last year is about 3%. So I like the fact that it is 48 plus years of uninterrupted dividend streak. Those are the kinds of companies that I like. Payment schedule, you get paid quarterly, March, June, September, and December, with the annual payout of $3.32. Now, let's take a look at bar chart. You can see, based on their analysis, it is currently a moderate buy based on 16 analysis. A month ago, it's still moderate buy. 2, 2 months or 3 months, pretty much the same. So definitely for me, it is a buy. I like I like all three companies. I think it is a company. These three companies are going to just continue to give me those passive incomes that I like based on dividends. That's why I like investing in these companies. With that said, thank you so much for watching. Please don't forget to hit that subscribe button if you haven't done so, and hit that like button. As always, please stay safe out there. Stay cool. Keep investing, and I'll catch you guys on the next video. Aloha.